Good day, all. Ira Epstein of Linn and Associates with your metals market update. And this is for Valentine's Day, the 14th of February 2019, just getting on to 3 p.m. Central Standard Time. I hope you all liked that came into our webinar. It was full. And if you take a look on our website, you'll see that the webinar is now posted, and away you go from there. So let's talk about today, because it's an interesting day. There were two elephants in the room to start the day off. Obviously, the Chinese trade talks, which are still going on and should go through tomorrow, and then the budget. Now, as I understand it, Congress has passed the budget. I understand, according to Mitch McConnell, that the president will, in fact, sign and declare a national emergency. I guess that means that what's going to happen is the government's not going to shut down. That's number one. Number two, apparently Mr. Trump, or President Trump, hasn't found those funds in other areas if he's got to declare a national emergency to do so, because it's surely going to cause a court battle. So we'll see where this all goes. I don't know who wins on this deal, but we're there. When I looked at the trade talks, I don't know. I'm concerned about them. I don't think they're going all that well personally. And the reason I say that is I'm looking at agriculture. It took a hit today. That's one of the areas that the Chinese have said they will buy. They will buy our beans. They want to buy semiconductor chips. They want to buy pork. They want to buy liquid nitrified gas. They want to buy everything but deal with the structural issues of the intellectual property and the subsidies they give to state-run companies to produce at losses and dump other places in the world. Not sure that that's going to work. We'll see what the president does with it. While some say he'll give 60 days more grace after March 1st, I think that the hardcore Republicans are going to be big time against that, and we'll see where this all goes. In the meantime, gold is backing off a little bit. It's down $2 for the week so far. Big deal. When you go to the daily bar chart, look at the sideways action that you're in right now. Today's action, you went down, broke out a previous low, and then came back. So you've got a pattern now of lower highs, lower lows. That is not bullish. The battleground is pretty clear to me. It's the 18-day average of closes as this market's trying to figure out what to do next. When you take a look at where you're at on this chart in terms of the Bollinger Bands, you're fairly far away from the upper band resistance of 1333 and the lower support of 1289. When you go to slow stochastics, momentum is down. Now, for those of you that decide to go on our website and look under the webinars, which is in our research area, you'll see that I started off giving you a lot of ideas about gold there. You might want to take a look at that. As we continue on with the GLD, the popular ETF of gold, falling back into that 18-day average area, trying to hold itself, not trending. Trend defined by a lower low, higher high. That is not a trend. An uptrend's higher lows, higher highs, downtrend, lower highs, lower lows. You're in the middle of no man's land right here. When you come to GDX, which is the miners for the gold, you can see how this market down right into the support. I mean, this is classic what I talk about. You lost an embedded reading back here. Often that leads to price and the 18-day average coming together. You can see where it's lost. Numbers are, one of them's under 80. Market backing off, comes right to it today, kisses that number, found its support. That doesn't mean the trend's up. It means it found its downside level, and now it's what does it do next. Another thing I've been telling you, it's hard to get a bull market in metals going if silver is losing to gold. It can happen. I've seen it happen in some years, but it's not the norm. And now that silver is losing in a big way to gold, you now again need 84 ounces of silver to buy 1 ounce of gold. Silver's at a disadvantage, and as you can see on this chart, it's got a pattern of lower highs, lower lows, resistance back into the 1570 level, and the market intraday was oversold. If it settles like this, it won't be. So I still think the bears are alive in that general area. In the copper market, you had an outside day down that collapsed intraday, got down to 275.35, hit the 18-day average, and bounced away from that. To be expected. The market lost its embedded reading back here. Right through here, as you can see, here's the first day it lost it. I think the pros were playing for the market to come down in price into this zone of the 100-day and 18-day. Missed it that day, missed it there. Today it went in, hit its objective. I'll call the market in what? In terms of the swing line in a downtrend, but the bias is up and the market is left in overbought condition with a 71 reading in the D line of the slow stochastic, so nothing there. Platinum's still in a downtrend, but it's down to a point where it's very oversold. Back here is when it hit the lower Bollinger Band. Hasn't done it, even though it's broken in price a bit from here, but you're in what I call an area that not a high probability for a collapse in price from here. Can happen, but I don't see it. And of course, look at the palladium, up $20. And I know I'm a broken record when I tell you that the reason for this is I think diesel engines are going the way of horse and buggy for regular cars. I'm not saying for motorized trucks and so on yet, but I am saying for the majority. So I see the platinum is not getting a bid from that, and the palladium is what you use in catalytic converters for gasoline engines, which aren't going away anytime soon. Not anytime soon. So that's where your demand is, especially if you ever get a Chinese-US deal done. It could help things. In terms of the dollar index, up into resistance at the upper Bollinger Band and stalled out there. You got today to 97.12. The Bollinger top was 97.13, and you're right back to 96.88.5. However, with all that happening, it's still very much a bull market. And even on breaks, it could have very good support in this 95.70 to 9600 level. So this market's still one for the books, where the dollar wins over the other countries just because we're the best at this point in time. You know, I talk about this and a lot more in my daily research. Now, here's what I do with my research. I write 2 reports a day on Tuesday, Wednesday, and Thursday. Monday 2, Sunday night 1, and on Friday 1. So it's, let me understand it, Monday, Tuesday, Wednesday, Thursday, 2 reports a day minimum, sometimes 3. And I'll give you what I see going on in the market, what I think the pros are doing, where they're at, and I back it up if you get my full commentary and written recommendations with my videos, with the video reports in the morning as well. I also throw in what's called daily numbers. If you're a Windows envelope fanatic like I am, it's one of the ways that you're looking for support resistance zones in a market. So I put it all together, give it to you on, if you want, a mobile app. You can watch it on your regular PC, a tablet. Our mobile app is ultra cool because what happens is we use push notifications. And on that, on your phone, you'll suddenly get one of those notifications. Ira's commentaries just came out or a video came out. Just click it. It'll open up. And our app works on both. So you'll understand this. The Android and Apple phones. And yes, it is free from us with our subscription. So away you go with that. If you'd like to try this, give us a call. You can go to our website, by the way, and sign up for our research there. If you've not had a free trial to it, do so. You can also buy it if you want there, or you can click right up here. It'll take you to the front page of our website. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.